Yeah, we can hear you.
All right. So kindly mute yourself, okay, so that we don't
Okay.
interfere with. Yeah.
Okay.
Good.
Okay.
Yeah. So just like I mentioned earlier, we have three types of charts. We have the line chart, we have the bar chart, and we have the candlestick chart. So let me show you an example of a line chart. So basically today we are going to learn price movement, how price moves in Forex and stuff like that. So what you see on your screen, I hope you can all see my screen. You can comment in the chat section. So this is basically a line chart. It just shows how price has moved over the past period. So from here, you realize that price started dropping from here. It got here and then it rose and it dropped again. It rose and it dropped again. So basically what you see here is just a line chart, just like what we know back in school. I think most of us will call it time series chart, right? Yeah, so that is one chart in Forex. The other chart is called the bar chart. Just like we did in school also, we have the bar graph. So yeah, so this is basically a bar chart. It shows again how price has moved. It shows the open, the close, and more like the selling and then the buying price of the particular currency or the currency you are trading. So currently we are on the Australian dollar against the Euro USD. So this is a bar chart. Now the third chart is what is popularly known. I mean, almost everyone who trades Forex uses this chart. It's called the candlestick chart, right? It's called the candlestick chart. Let me share. Let's go into the details of candlesticks. So as a forex trader, you are either using any of these three charts, the bar chart, the line chart, and then the candlestick chart. But I advise you to stick to the candlestick chart since that is easy to read and then understand as well. So yeah, great. Okay, so okay, so this is how the bar chart looks like the bar. This is how it looks like. So it shows you the low, it shows you the high, it shows you the close, and then the open. So basically, what this means is that the open is more like the open price. So the beginning of the trading session, where did the price start? So for instance, if you have the price or the currency selling at 10,000, we will say that the open price is 10,000. So the moment the market opens, right, the price at which the currency is exchanged is known as the open price. So in this case, the example I said, 10,000 becomes the what? The open price. Now, we also have the high. So the high basically shows the highest point at which the price was traded in a particular trading session, right? So if the open price here was, let's say, 1,000, and after maybe the trading day, the price rose to 20,000 and it never rose above the 20,000, then we can say that the high price is what? 20,000, right? So the open was 10,000 and then the high price is 20,000. Now, aside the high price and then the open price, we also have the low and the close. I think this is more like self-explanatory. The low basically says the high is the highest point at which the highest price at which the currency traded. The lower or the low price also here means the lowest price at which the currency was traded. So if the currency opened at 10,000 and during the trading session, the price dropped from 10,000 to 6,000 and never went below that particular price, then we can say the low is 6,000. Now, once there's open, there's definitely a close. So the close price here is the last price at which the currency was traded. Take note, the close price was the last price at which the currency was traded in a particular session. So let's assume the price opened at 10,000. during the course of the trading session, it went to 20,000. Now, before the market closed, right? So let's say the market opened at 7 a.m. and closed at 6 p.m. So before the market closed at 6 p.m., the price was trading at $15,000 or Ghana cedi. Then the close price here becomes what? 15,000. So the price rose, the price opened at what? 10,000, traded as high as 20,000, and finally settled at what? 15,000. And during the course of the trading session, price went as low as 6,000. So these are the this is what a typical bar chart or a bar will show you. It will show you the open, it will show you the close, it will show you the high and then the low as well. So just like I said earlier, if you can still see my screen, this is a bar chart for you, a typical bar chart. I mean, for me, reading bar chart is very difficult for me, so I don't normally use it, but this is how a bar chart will look like. So I'll go back to the chart and show you how it's actually traded, right? So that is the second chart in currency trading or any trading, you know. Now the third one is the third and my favorite. I mean, I say my favorite because I usually like trading with candlesticks. So this is how a typical candlesticks looks like. It also follows the same logic with the bar. So you realize that you have the low here, you have the open, you have the close, and you have the high here. And this is the real body. So so you know that in the forex market you are either buying and then you are selling. So there are two types of people in the forex market: those who are buying the currency and those who are selling the currency as well. For buyers, right? For buyers, you see a green candle. So anytime you see a green candle, it means that there were buyers in the market, right? So this candle shows that this is more like buyers candle, but usually we call it a bullish candle. So bear in mind, buyers are bulls. So when price is going up, we say price is bullish, right? And we also have the sellers, which is red here. Sellers basically in forex or any trading, it's called they are called the bears or bearish. So when you hear bullish and bearish, you should know the difference. When somebody says that, oh, the market is bullish today, what they are trying to say is that the market was going, like people were buying the currency, so price was going up. If somebody tells you the market was bearish today, it means that sellers were actually selling, so price went down or price was going down. So when you pick a bullish candle, I'll be using bullish and bearish since we now understand what each of them mean. So this is basically a bullish candle, right? You have the real body. So the real body is basically the distance or the difference between the open and then the close. So what is encompassed in the open and close is the body. So in this bullish candle, you see the real body, and since you are buying, right, it means that price traded higher than the previous price. So you realize that the open is here and then the close is here. So price opened low and closed high. But during the course of the trading session, price went as high as this level. So this level shows the high, right? And during the trading session, price went as low as this level. So this is also known as what? The low for a typical bullish candle. The flip side or the opposite of a bullish candle is what? A bearish candle, like sellers, just like I said. Since with bearish, you realize that price dropped from the price at which it opened, right? Or the open price. So you realize that for bearish candles, the open is at the top and the close is at the bottom, right? So price open here. So let's assume this level is 6,000. Price opened at 6,000 and closed at, maybe let's say here is around 4,000. So you realize that price dropped from the high towards the low. And during the trading session too, the high and the low for the bullish is still the same for the bears as well, the bearish. So you realize that during the trading session, price went as low as this level and then as high as this level. So let me put some numbers to it, right? So for the bullish candle, let's assume price open at 6,000. And during the trading session, it went to 10,000. And I mean, it closed at 10,000 before the market closed. but during that trading session, price went as high as 15,000. Then the high becomes 15,000, and maybe it dropped to, let's say, 2,000. Then the 2,000 becomes the low. So anytime you pick a bearish candle, look at the low, look at the high, look at the open, and look at the close, since it will help us in our analysis. The same thing applies to the bearish as well. So realize that price opened at 10,000, dropped to 6,000. But during the trading session, price went as high as 20,000, but couldn't stay there, but dropped back to 10,000 and went to 6,000. And during the trading session too, price went as low as maybe, let's say, 2,000 as well. So that is that for candlestick. So when you, so I think this explains it better. Bullish and then what's bearish candle. So a typical candlesticks candlestick charts. Let me share my screen with you. So go back to my screen. Yeah. So just like you see on your screens, the green represents bulls or bearish, sorry, bullish, right? So bulls and bullish, and the red represents bears, or we say bearish, right? So from here, you realize that price open at this level, this particular candle, right? Price open at this level, went as low as this, and then closed at this. But during the trading session, it went as high as this. You get it? Yeah. So that's just for guys. Mute yourself when you join, please. Yeah. So that is that for basics of the three types of charts. Now the next thing on the list, is candlestick. So since most of us trade, almost all forex traders trade the candlesticks. They don't trade any other chart. So the line charts on the bar charts, we don't use them at all. We only use the candlesticks. So we'll delve deep into candlesticks analysis, right? So going back to candlesticks analysis, yeah. So going back to candlesticks analysis, there are so many types of candlesticks, like so many types of candlesticks. And unfortunately, you can't know all of them. You just know the basics and then the important ones. So the first one you see here, right, where my mouse is or my cursor is called a bearish engulfing, right? So what it means is that, this green candle here represents bulls, and this red candle here represents bears. And when we say engulfing, we all know what engulfing means, to engulf something. To realize that the bears were in the market, or the bulls were in the market, all right, but later on the bears took over, and then the bears candle is more like 2 times longer than the bulls candle. When you see that type of candlesticks, we call it a bearish engulfing, right? Just like we have the bearish engulfing, we also have the bullish engulfing as well. And what it means is that, so just you see here, bullish engulfing. So you see that the bears were in the market, price was going down, people were selling, and then buyers jumped into the market and pushed the price up. So realize that the bulls candle, right, or the bullish candle is almost 2 times longer than the bearish candle. When you see that setup, we say that that's bullish engulfing pattern. It means that price is about to go up. So when you see a bearish engulfing, it means that sellers are more than buyers in the market. And anytime sellers are more than buyers in the market, price drops. So people sell. So this is a chance or an opportunity for you to sell that particular currency, right? But you have to consider other indicators as well before you actually make your final decision. But anytime you see a bearish engulfing, it means that sellers are more than buyers in the market, so price will definitely drop. So you have to sell. And when you see a bullish engulfing too, it means that, okay, buyers have stepped into the market and it's time to actually buy. I don't know if I can find a typical bullish or bearish engulfing on chart, but let me go there and then see if I'll get a setup for you. So well, if I don't find, I mean, you just have to go through the charts. There are plenty. You definitely find them. Okay, yeah. So this is, I don't know if you guys can see, right? Let me, okay. Yeah, you see, this is a typical bearish engulfing, right? You realize that price was going up here. Buyers were buying, pushing price up, and then sellers jumping. So you realize that this bearish candle is longer than the previous candle, which was the bullish candle. Since then, price dropped to this level. So anytime you see this setup, let me just, yeah, I'm talking about this level, right? So when you see something like this, it's an opportunity for you to sell that particular currency, right? It's an opportunity for you to sell that currency because the previous candle, which was a bullish candle, is shorter, right, than the current candle, which is a bearish candle. And this is a bearish engulfing candle. So when you see this setup, you have to sell that particular currency. Let me see if I'll get a bullish engulfing. Yeah, I think there is one here. This is typically, where is it? Yeah, so this currency, this setup, right, this is called a bullish engulfing. So realize that bears were in the market, sellers were in the market here. They were selling, and then buyers jumped in. So the moment you see this, so let me see if I'll get a curve to yeah, let me see if I'll get a curve. Okay, yeah, so this is what I'm talking about, right? This is what I'm talking about. Yeah, this level, this is what I'm talking about. Bears were in the market selling, and then which were, I mean, sellers, of course, and buyers stepped in and pushed the price up. So realize that this is a bullish engulfing candle. Once you see that, it means that price will go up, so you need to buy the currency, right? But the fact that you see this doesn't mean, oh, you need to jump in and then start buying. You need to also consider other indicators as well, which we will teach you in our subsequent session. So let's go back to our candlesticks. So we've covered bearish engulfing and bullish engulfing. Now the next one, which is, I mean, every trader's favorite, is called the hammer, right? It's called the hammer. So just like we have hammer in carpentry, hammer, you have the head and then you have the long stick. So in candlestick analysis, when you see this line, it's called a pin, right? It's called a pin, so, or a wick. So I don't want to be too technical, but it's called a pick or a wick. So this is the body and this is the wick, right? So when you see a setup like this, or this particular candlestick is called the hammer, right? And it usually happens or shows up during, let me say, a downtrend. We'll get into what downtrend is, but just know that we have the hammer and then we have, so once we have the hammer, we also have the inverted hammer, which is called the shooting star, right? So this is the hammer. The inverse of the hammer, which is this particular candle, is called the shooting star. So let me take you to our chart again for us to see a typical setup. So hammer. I hope we get a perfect setup. I hope we get a perfect setup. Yeah. So this here, you see, this is, oh, you see, this is what I'm talking about. So this is a shooting star. Since we know that the inverse of hammer is shooting star, this is a shooting star. And usually shooting star happens when you see a shooting star. right? In an uptrend, we'll get into uptrends. So when you see a shooting star, anytime you see a shooting star, it means that buyers are not able to take price higher, so sellers are jumping into the market. So the moment you see that setup, you need to actually sell that particular currency. So for Australian dollar against the US dollar, the moment we see this shooting star, we'll be like, okay, I think this is a good time to actually sell the currency. So you realize that price dropped from this level to this level. Yeah, because buyers were not able to take the price up. So price dropped from that level to this level. So when you see a shooting star, it means that, oh, okay, buyers are not able to push the price higher. So sellers are jumping in. So you join the sellers and then sell, right? Yeah. So that is a shooting star. Let me see if I'll see a hammer. This is not your typical hammer, right? But I mean, in trading, it's called dodgy candles. But for the purpose of this class, let me scroll back and see if I'll see a hammer. Let me see if okay. Yeah, I think we've seen a hammer here. So this is what I'm talking about. So this is what a hammer. The previous one we saw was the shooting star, and this is a hammer. Usually when you see a hammer, right, it means that it's the opposite of shooting star. Sellers are not able to take the price down, so buyers are jumping in. So as a currency trader, there's the need for me to actually jump in and also start buying the currency. So you realize that the moment this candle showed here, price went up from that level to this level, right? From, yeah, I think it even went higher. Yeah, right. So price went from that level to this level before dropping back to this level. So when you see a hammer, there's a need to what? Buy that particular currency. Now let's look at one last candlestick. I mean, there are many, like thousands of setups, but for the purpose of this class, we just look at 3 and then we'll go into other important topics. So the other important candlestick is known as the 3 black crows, right? I'm an Ashanti man, I don't want to bite my tongue, but it's known as the 3 black crows, right? So it's just 3 bearish candles, 3 straight bearish candles. Now, once there is 3 black crows, there is also the 3 white soldiers. That is the opposite of the crows. So when you see 3 black crows, it means that sellers are in the market, like are heavily in the market. So price will definitely go down. So realize that people sold here, people sold here, and people sold here. It means that sellers are more than buyers in the market. So the price will go down. So you need to also sell the currency. And when you see the 3 white soldiers, it means that the buyers or the bulls are becoming strong in the market. So you need to also jump in and then buy that currency. So for the purpose of this class, we only stick to this, I think 6 types of candle. We have the bearish engulfing, bullish engulfing, we have the hammer, and then we have the shooting star, 3 black crows, and then we have the 3 white soldiers. Now let me go back to the chart and see if I'll get a setup for you. I hope I get a setup. So this setup you see here, these 3 candlesticks here, this is the 3 black crows, right? You realize that sellers selling, sellers selling, sellers selling. And since then, look at the measure. Price dropped from this level, right? Oh, come on. You realize that price dropped from this level up to this level, right? Yeah. So that is for the 3 black crows. So you see 1, 2, 3 straight bearish candles, like long bearish candles. Don't look at the short ones. Look at the relatively long ones. So this. The moment you see that setup, it means that sellers are becoming more in the market. So price will drop from whatever level it is trading at. So what you do as a trader is that you look at this setup and then you benchmark it with other indicators or other rules, and then you enter the trade. So how I would have traded this particular trade was that I would wait for price to come back. So we call it a retracement. I'll wait for price to come up small. So I would have entered here. I would have entered at this level. You see, I would have entered at this level. So the moment I see this setup, okay, I'll draw a line here and wait for price to come back to that level, and I'll then sell because it gives me a good entry point. So if I had sold here, boom, then you make some profit. Now let's look at the three white soldiers. I hope I find a setup for you. I hope I find a setup for you. Okay, cool. So this is a setup. You see, 1, 2, 3. 3 straight. Can you guys see? I don't know if I'm indicating it enough. Can you guys see it? So you see 1, 2, 3. 3 straight bullish candles. So again, as a trader, what should I do? The moment I see 3 straight bullish candles, what again? It means that buyers are jumping into the market. So I would wait for a retracement. So let's look at how far price went. So price went from this level straight to boom, this level. You see from this level to this level. So if I was trading this currency, what would I do again? I'll still draw my line. I'll still draw my line somewhere here. You see, I'll still draw my line somewhere here. Okay, I'll wait for price to come back to this level and I can buy. So the moment I see that, boom, I buy the currency and then you move. So yeah, for the purpose of this class, we will stick to this 6 candlesticks setups, right? So going back, we know the bearish engulfing. It means that sellers are coming into the market. You need to sell. You know the bullish engulfing. It means that buyers are coming into the market, so you need to buy. You know the hammer. It means that sellers are not able to take price further down, so buyers are jumping in, so you need to buy. When you see a shooting star, it means buyers are not able to take price higher than it's currently trading, so you need to sell that particular currency. And then you have the 3 black crows, right? It means that sellers are becoming more than buyers in the market. So what do? You also join sellers and then you sell. The flip side is the 3 white soldiers. It means buyers are coming into the market, so you need to also start buying that particular currency. So going back to our topic for today, we've done the types of charts, we've done the candlesticks. Now we need to look at support and resistance and then trend lines. I'm sure those who have heard people say they trade currencies, what they usually do is that, oh, just look at support and resistance, and you're wondering, what at all is support and resistance? So now in Forex trading or in currency trading, right, price moves in 3 different ways, right? So it's either the price is trending up or the price is trending down. If the price is not trending up or it's not trending down, then price is consolidating. Okay, so bear in mind these 3 types of price movement or market trends. You have the uptrend, you have the downtrend, and then you have the consolidation. The uptrend basically means that price has been going up since whatever trading session it started, right? Since the previous. Cool. So yeah. I think Herbert just asked what consolidation means. So just like I said, price is either going up or is going down. So if price is not going up or down, price is going sideways. So consolidation means basically price is going sideways. It's not trending up, it's not trending downwards. It's just more like a straight line. Well, if there's that thing, right? So I'll show you what consolidation means. So just on the chart, you see the uptrend, and then you see the downtrend, right? So yeah, this is what I'm trying to say. That it's either price is going up or price is what going down. So this is basically an uptrend. Realize that price is going, like the price open here, and then it's been going up, 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 up. So when you draw a line, you get a line that is going up, like a trend line. So this is called a trend line. It means price is going up. Now, if price is not going up and it's not going down, right, it's going sideways, known as consolidation. So it's also called ranging. So price is just trading within a given how do you call it, a given range. So let me put numbers to it. Let's say price opens here at 10,000, and then an hour later it goes to 11,000. 2 hours later it goes to 12,000. 3 hours later it goes to 15,000, and then 20,000. You can then say price is trending up, or you can say there's an uptrend in the market. That is for an uptrend. Price changes, like price keeps increasing. But for the consolidation, the price will trade within a given range. So let's say you have between 12,000 to, let's say, I don't know why I'm not even using the board. Let me use the board. Okay. So for the ranging, or if price is ranging, right? I can't spell ranging, sad. So if price is ranging, I'm saying that the price will trade between two given sets of prices. So like between 12,000 and 14,000, right? You get it? So price is moving between this. So if price is not at 12,000, it's at 14,000. If it's not at 14,000, it's at 12,000. If not, then this. If not, then this. Then you can say price is actually ranging. But an uptrend means that price goes from 12,000, 13,000, then to 14,000, then to 15,000, 15,000, and then it goes upwards, right? So yeah, I don't know if I've answered your question, Herbert. So let's go back to, so let's go back to our screen here. Let's go back to our screen here. You get it? So uptrend, downtrend, and then you have what? A consolidation, which is price is ranging. Now I want to be practical, so I'll take you to my chart, my trading view chart. So this is what I'm saying. So for instance, okay, let me pick this period. You realize that price rose from this level. Price rose from this level. Oh, okay, cool. So price rose from this level up to this level. So you can say that during this particular session, price was there was an uptrend in the market, or the trend in the market is what? Upwards. Price opened here and has been going up since. We can say it's a trend line. So somebody will ask, how do I trade a trend line? So anytime you see the trend line, you just, we'll get into support and resistance for you to understand, but now basically just know that price is either trending upwards or is trending downwards or consolidating. So this is a typical uptrend. I'm using my chart to explain. And yes, so this is a ranging market, right? So this is a ranging market. You realize that price has been trading within this range. So there is no clear upwards or there is no clear downwards. Price goes here, come back, goes here, come back, goes here, come back, goes here, right? So you can say price is what? Ranging. So I don't know if you guys see my charts, like when I post charts in the group, but sometimes you realize that I have things like something like this, right? Something like this, yeah. So anytime I draw this on my chart, I'm trying to show that the price is ranging and there is no clear trend in the market, whether an upwards or a downwards. Price is just trading sideways. So as a trader, what will I do? I'll wait for price to break that level and I can enter my trade. Herbert, are you okay now? Okay. So yeah. So now we are done with trend lines. Going back to the drawing board, what is next on the list? So yeah, support and resistance, right? Support and resistance. So what does support and resistance mean? It's very simple, right? When price is trading at a given time or at a given range, price has the highest level it can get to and the lowest level it can get to, right? So this highest and lowest level are known as support and resistance. And support and resistance differs depending on the current state of the market, whether it's an uptrend, a downtrend, or a sideways. Now, bear in mind, trends goes with buyers and then sellers. So an uptrend is for buyers, or is for what? Bulls. So when price is trending upwards, we say that buyers are in the market because price keeps going up, right? And if price is trending downwards, we say that sellers are in the market. So downtrend is synonymous with bears or bearish, and then uptrend is synonymous with bulls or buyers. Do you get it? Yeah. So if you don't understand, you can stop me and then I'll go back and explain or clarify something you didn't get previously. So this is basically a typical chart, or how a chart will look like. So I'm saying that for support and resistance, the resistance is the highest price at which price can be traded or price traded at a given range or at a given period. Price was not able to break that level. So the moment price gets to the resistance level, I mean, it's resistance, just like we all know, like something is trying to penetrate something, but there's a blockage, right? You get it. So let me use this analogy. Let's say a moving car driving at a top speed, and there's a thick wall in front of the car. The moment the car hits the wall, the velocity will decrease, and either the car will reverse or it breaks through the wall, right? So the wall here is serving as the resistance, something that is preventing the movement of the car. The same logic is applied in trading. Resistance is a level that is preventing price from going upwards beyond the current trading price, right? And then the support basically means the holding price or the holding level, where price, like, so let me go back to the chart and explain this for you to understand properly. So in my typical chart here, right, let me clear. Okay, so in your typical chart, good, let me use this level. So in your typical chart, you realize that price was ranging nicely. So price broke this level. Yeah, price broke this level and it went up. Now, once it got here, it was not able to go beyond this particular price, right? If you can see my red line here. So let me use this as a green line. Let me change it to green. Yeah. So the green line here basically shows that price was not able to go beyond this level. So this particular level becomes a resistance level. Do you get it? So price was coming up, up, up. Under normal circumstance, it should go beyond this level, but price was not able to go beyond that level. So it got here and then it reversed. So this level is known as the resistance level. Now, the opposite of resistance is known as support level. So the support level basically shows the lowest price, right, at which price was traded, and price was not able to go beyond that lowest price. So for here, price got to this level, but was not able to go below this level. So it went up. So this level here becomes what? Your support level or your support line. You get it? So you have your resistance and then you have your support. So anytime, once you get the support and resistance, you look at how price behaves at that level. So from that level, you realize that price got to this level, was not able to price got to this level, was not able to break through, so it reversed back to this level. Then this level served as the support, and it can't break below the support, so it also went back to test your resistance. It got to the resistance. Since that is a resistance line, it couldn't break, so it came back to test your support line again. Then it says, let me take a breath and gather momentum and go up. It did. It went to your resistance level. It couldn't break through. Then it came back to test your support line. You get it? So these three levels are known as the resistance level or the resistance. So when you draw a line to connect this level, you can say it's a resistance line. But this is a resistance level and this is a support level. So the resistance level is where price is not able to break higher above the current price. And support level is where price is not able to break lower below the current price. So you take notice of support and resistance level. And it's very easy to identify, usually in a ranging market, right? So this level here is a consolidation or a ranging market. You get it? So you have your support, you have your support here, and then your resistance level. But now, anytime price breaks a support level, it becomes a resistance level, right? So note that anytime price breaks a support level, it becomes a resistance level. So I think this was a false breakout. So let me show you a typical example here. I think this is a typical example. So you have a resistance here, right? Because price got to this level, was not able to penetrate, it went back, came back, was not able to penetrate and went down and then broke this level. The moment price breaks a resistance level, it becomes a support. It means that will be the lowest price that the currency can get to, right? So you realize that when price broke that level, this level, right? So it broke the level here and then it went up and then it came back, price came back to test that level again, support, it wasn't able to break. So what did price do? Price bounced off that level. You get it? So usually price bounces off at support and resistance level. So anytime price gets to a support level, it means that price will reverse. When it gets to a resistance level too, price will reverse. So how do you trade a support and resistance? This is what you do. For instance, I want to buy this particular currency. So I have, okay, let me use the selling bit first. So price was going down and then it started going up. It got to this level. It didn't break and then it came down. It traded below that particular price for a moment and went up again to test this level. As a trader, I would wait to enter at this level because I know that when price gets here, it will reverse. So I'll sell at this level. Do you get it? So that is how you trade support and resistance. So this is how you trade a resistance. Note, you sell at a resistance level, you buy at a support level. I hope you guys are taking note. You sell at a resistance level, you buy at what? A support level. So this level serving as my resistance. Once price gets to that level, I'll sell that particular currency. And look at the profit you would have made if you had sold there. From here, price went down to this level. If you do the calculation, that should give you about some 50 pips. And we'll get into how to calculate the monetary value of pips later on. But if you had sold here, you'd have made some 50 pips, right? Good. And how do you trade a support level? You trade a support level by buying the currency. So here, price broke this level, went up, came back to test this level. So as a trader, the moment price comes here, boom, I'll buy because price will go up above that level. So I'll just buy here and see where it took us. The moment you bought here, boom, that's about 100 and something pips. You've made some cool cash. That is how you trade your support level. But mind you, you can't trade support and resistance level in isolation. No, you need to combine them with other indicators as well, right? You can also identify support and resistance in a trend. So let's have our trend line here. Right? let's have our trend line here. So this is basically an uptrend. So it means that price is going up, right? But then price got here, it came back, it couldn't break through this level, and then it went up. So this level here becomes your support level for a trend, for a trending market. So just take note. You have one, right? And then you also have another. You also have another level. You get it? So just take note. This levels becomes your support levels. Okay. Yeah. What am I doing? Cool. Yeah, so this is what I'm trying to do. Show you the support and resistance levels, right? So you realize that price, so this level will serve as what? Your support level for an uptrend. Yeah, so as a trader, once you get your trend line, you look at how, okay, price is trending up. Okay, so at what point what did I say? I say you buy at a support and you sell at what? A resistance. So once price is going up, you are looking for an opportunity to actually buy this particular currency. So price goes up, it comes back to test your trend line, then you buy here. So I would have entered the trade here. Or if I missed out the trade here, I'll wait for another rate test of my support line and I'll enter the trade. So price got to this level and then boom, I bought. The moment I bought, price went up, 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 up to this level. You get it? Yeah. So that is how you trade support and resistance line. So note, I hope you guys are taking notes, because these things are not things that, like, you should have it on your fingertips. It shouldn't be something that you should always refer to for support and resistance, right? So this is for an uptrend. So for an uptrend too, there is definitely a resistance. You can identify a resistance in an uptrend. You can identify a resistance in an uptrend. Yes. So let me use this level for instance. Let me use this level for instance. Yeah, I think this makes more sense, right? So for an uptrend, this becomes your resistance level. What did I say about resistance level? You sell at resistance levels, right? So price is trending upwards, price is trending upwards. What do? You buy at your support here, then, oh, you missed the opportunity. You are looking for another opportunity to actually make money. What do? You wait to sell at a resistance. So this line becomes your resistance. No, it even started from this line, right? Yeah. So this line is your resistance level. Yeah, you see the green arrow, right? So the green arrow here becomes your resistance level. Okay, somebody, how many minutes more? You have 9 minutes more. We have 9 minutes more to end the class. Yeah. So this is your what? Your resistance level. So as a trader, you wait to sell at your resistance level. So you see the green arrows for an uptrend is your typical resistance level. So you wait for price to get to those levels and then you sell your currency. So if you missed out the opportunity to sell here, you wait for the opportunity to sell here as well. If you missed out on that, you wait for the third opportunity to sell. Now, if you missed out on this opportunity, there's still your last opportunity to actually sell here. So you see the 4 green lines, it shows the resistance level for an uptrend, and you either sell at that level. So you realize that if you had sold at that level, right, from this level, price went down to this level. This, in my rough estimation, that should be about some 1,000 pips or some 500 pips for you. And that's a lot of money as a Forex trader. You get it. So that is how you trade support and resistance for an uptrend. There's definitely support and resistance for a downtrend as well. So you realize that this is typically a downtrend. And how do you know a downtrend? You draw your trend line. This is a downtrend. So you draw your trend line. you draw your trend line. Yeah, so you realize that price is going down, so price is on a downtrend. Same logic, same logic, same logic. You are looking for your resistance and then you are looking for your support levels. So for a downtrend, right? For a downtrend, this becomes your resistance level. The green lines becomes your resistance level. And then the green arrow, sorry, becomes your resistance level. And your red arrows here becomes your support level, right? So as a trader, you are looking for what? You are looking for an opportunity to buy and sell at support and what? Resistance level for both an uptrend and a downtrend, right? So this is just basic analysis. I didn't take time to actually read this chart, but this is how you draw a trend line for a downtrend. So you realize that you have your down line here showing the support line. So this is what your support line. Price is not able to go below that level. So it gets there and then it bounces off. And this is your what? Your resistance levels. Price is not able to go and then price is not actually able to penetrate above those levels. You get it? So yeah, so if you are trading, you would like to either sell here, or if you miss the opportunity, you sell here, or if you miss another opportunity, you also sell here. If you want to buy, you buy here, or you buy here, or you buy here. But you see, one thing is very dangerous in Forex. Let me give you this analogy. Let's say you have a falling knife, right? And you are supposed to catch a falling knife with your bare hand. Imagine what will happen to you. Like the knife will cut you, like, and you lose a lot of blood. That is how trading with trends is like. Anytime there's a trend, don't trade against the trend. What do I mean by not trading against the trend? You've seen that price is falling from this level, still dropping. It means that sellers are in the market. Sellers are more than buyers. So you don't have to buy. You have to join the sellers to sell. If you decide to buy a market that is trending down, we call it catching a falling knife. You definitely lose money because sellers are more than buyers in the market. So if you decide to buy the currency, nobody will buy. People are selling. So you have a worthless currency. Do you understand? So that is what. So you either trade with a trend or you don't trade at all, or you wait for a trend reversal, right? So when you see a downtrend, I don't advise you to buy the currency. No, I rather advise you that you wait for price to hit your resistance level and you also sell. So this particular currency, I wouldn't have bought at the red arrows. No, even though if depending on your risk levels, you can catch the falling knife. That is if you have super glue in your hand, literally, you can catch the falling knife. But if you don't have super glue, I don't advise you to buy in a downtrend market. So you have to what? Sell. So how do you trade a downtrend? You wait for price to retest your resistance level and you also sell. So here, so let's say I missed out on the opportunity from this level, right, up to this level. Okay, I'll wait for price to come back to test my resistance level here, right? And then I'll also sell. So I will sell at this level. That is what I'll do. So I'll sell, you sell at this level. You get it? So you sell at this level. That is how you trade a trend line. You sell at this level. You don't buy. Likewise, for an uptrend, it means that buyers are more than sellers in the market. So who are you to sell, right? You have to also buy. So what do? You also wait for your support and then what? You buy, right? So you also buy your currency here. So just take note. For an uptrend, you buy. For a downtrend, you sell. You sell at your resistance level, you buy at your support level. So I guess that is all for today. So yeah, so I guess we've covered the topics you are supposed to cover today. types of charts, candlesticks, support and resistance, and trend lines. So from now, I think from now, most of you can decide to open a trading a demo account. And so after this course, right, go to www.tradingview.com and create an account with them. From next week, Monday, we will start demo trading where, I'll be sending you like trades to actually take, just more like a practice, because we can't keep doing theory without any practical stuff. So go to tradingview.com or download MT4. Download MT4, or I can't spell or, sadly. Download MT4 or MT5 on Play Store, right? On Play Store. So once you download this app, you can create a demo account for free. And I think you'll be given some, virtual money to actually start trading. So currently the site I'm using now, what you see here is the trading view, right? So you see www.tradingview.com, and then you create accounts with TradingView, so that next week we actually start being practical than just learning the theory. So if you have any question, you can ask. So to wrap up what we did today, any question? Yeah, I think so. I don't use iOS, but I want to believe MT4 is on iOS. But if MT4 is not on iOS, don't worry, just download, just create an account with tradingview.com, right? So just to wrap up what we did today, we learned about the types of charts. We talked about the line chart, the bar chart, and then the candlestick, right? We also went into we just learned the basics of candlesticks, where we talked of the hammer, the shooting star, and we also talked of the bullish engulfing and bearish engulfing. We also talked about the three black crows. We also talked about the three white soldiers, right? So those are the three types of candlesticks that, for the purpose of this course, since it's a basic or an introduction to Forex, we'll have to just be familiar with, so that when we see them in our chart, we'll be able to know how to trade them. So apart from Herbert asking whether he'll get iOS on, whether you get MT4 on iOS, any other question? If you don't understand anything, just feel free to. Okay, I think it is. So Herbert, I learned it's on iOS. So just download or create an account with TradingView. Can we use both websites and app? Oh yeah. So what I do is that I use the TradingView for my analysis, right? So if you follow me on Instagram, for instance, I post all my analysis with TradingView charts, but I place my trade with the MT4. So I have the MT4 app, and then I also use the TradingView for my analysis. You can also use the MT4 to do your analysis, but I prefer using TradingView. Any other question? So my IG handle, don't have it. Okay, so is this is FME_FX, right? So let me just type it. So this is my handle on IG. Yeah, this is my I'm supposed to send it to everyone, sorry. Yeah, so this is my IG. So I usually post my analysis using TradingView chart or TradingView to do my analysis, and then I place my trade on MT4. Yeah, so you can use both the app and yeah, sure. So any other question before we end the class? But we can always continue on the page. I mean, let's try to make the page active as much as possible. You can ask questions because this is more like a lifetime. Well, we learned it the hard way, so we want you to like learn it if there's something called the easy way. Yeah. So on that note, thank you all for joining our session for today, and I hope you learned something new and something that you can actually apply. So when you create your TradingView account, you can also just looking at this chart and then start like that. Yes. So any question? MT4, MT5 is not meant to be another version, but MT4 is pretty good. Yeah, but you see, most people are confused whether to use MT5 or MT4. You can use either like MT4 or MT5, but there are some brokers, right? They prefer you use MT5 because of some of the currencies they have. So MT4 usually has limited currencies, right? But MT5 has more than, I think it even has indices and cryptos and all those things. So, but MT4 is pretty cool. So, yeah, just like you can use MT4. Any other question before we end our session for today? Okay, so guys, thank you for joining our Zoom session, and let's continue on the page.